back here with Debbie from Farmers Insurance. For the second part of our video, we're going to talk about renters, homeowners, and then also a little bit about umbrella policies. So we talked about auto in the last video, and now we're getting into something I think that nearly every college student really needs to look at. If they don't have it, they should get it. If they don't, or if they have it, they should make sure they have appropriate limits and stuff set up.
Yes.
And that's renter's insurance.
Right.
What's the big difference between renter's insurance and homeowner's insurance?
Well, renter's insurance covers your property. So you rent this little apartment here, and so this is your chair and your table, and if there's a fire, we're going to pay for that, and all your clothes and your laptop that's sitting over there, that kind of thing.
Sure.
If you have a homeowner's, we're paying that same fire, we're paying for your stuff, but we're also paying to put the building back.
Okay.
When you rent, your landlord is taking care of the walls.
Okay.
And putting the building back. So you want to protect what's inside that belongs to you, but another part of the renters is the liability and the medical payments that are on it. A lot of people don't really care, thought, if everything's gone out of my apartment, I'm out $150,
Right.
It's, I really don't have
Garage
anything.
sale stuff. Or
Yeah,
something, right?
yeah, I picked it up on the side of it, right.
Right.
And so they're not really concerned about that.
Sure.
But, and so you can do it that way. And then there's some people that, man, I wish as a 60-year-old, I'd like to have that apartment that college kid has.
Right.
Kind of thing. So they would be the property would be important to them. And so you can fit that wherever that is. So you could have a low property number that, 5,000 would take care of what I had.
Right.
But you would need that liability. So you're in an apartment building, and so it's not, if you leave the water running in the bathtub, go off to class and come back 6 hours later,
Right.
And you're on the third floor, well, that didn't just affect you. That affected your next door neighbors, the guy that's connected to you in the back, and all the way down on the floors. They're all wet now because you left your tub going.
Sure.
So you don't just say, oops, sorry. They're going to expect to be reimbursed, and it was your fault. It was your negligence that caused that.
Okay.
So the liability that you would have on your renter's policy would cover your negligence, unless it was intentional.
Right.
Then,
of course.
Then so sorry.
But accidents happen, and
Yes, they do.
When there's several students get together at an apartment,
Yes.
anything can happen.
Yes, they
things
can.
can be broken.
Yes.
People can be broken.
People can be broken. Yes, that's right.
I've heard incidents of where celebrations have been going on at people's apartments, and people have decided jumping off the balcony was a good idea.
Yeah.
So
Yeah. Now, whether they would consider you negligent in that thing, you would have to be negligent for your
Okay.
insurance to pay for it. If somebody's just stupid,
that's
that's their
okay.
Yeah, that's their thing. But if you were responsible for them and you knew that balcony thing was wiggly and you didn't
Okay.
say y'all don't go out there or something, then you could be held responsible for that
Okay.
kind of thing.
Well, that's
Yeah.
important to know.
And this liability, it's not just while you're in your apartment either.
Okay.
It covers you, it follows you anywhere in the world that you are. And I use an example of another agent had a client that was at the golf course.
Okay.
He swung back his golf club and hit his friend in the head accidentally.
Oh.
And he had short-term memory loss for quite a long time. He was an accountant, and the two didn't match, short-term memory loss and numbers. He couldn't
Right.
work for quite a while. He had a family, and this guy's, they weren't in his backyard, they were at the golf course, but his homeowner's liability, and same way with your renters, your liability would cover you during that, for that.
Okay.
So it paid for all that guy's medical bills, for his
Wow,
lost
okay.
wages, and kept him where he was, because it was his fault, and it wasn't intentional.
Okay.
So, that's big. I mean, And we see families that, you know, they have teenage boys and they're playing out in the middle of the
Sure.
street and playing touch football, but somebody gets a broken leg.
Okay.
And so the guy with the broken leg, his mom says, you know, you shouldn't have done that. And so if your kid is the one that actually tackled him, then your liability would cover that kid's broken leg.
Okay.
And
So maybe if students were out playing football
yes,
at the park here, and so that liability coverage would follow
yes, it
them
would follow
to that
you.
football field. Okay.
Yeah, yeah.
All right.
Now, if you're doing it professionally, you know,
Well,
for the
right.
Raiders, then it wouldn't. But just goofing
Just at the
around,
park.
yeah,
Hang out with friends. And
yes,
Throwing the football, having to get together, a little
Yeah.
barbecue or something.
you know, bumping heads and concussions and you know
Sure.
that kind of thing. Yeah, but it covers you for all kinds of strange things that you wouldn't think about. And people don't think about their liability.
Right.
They think about it that somebody slips and falls on the ice on their front porch,
Sure.
and they think that that's as far as it goes. But it's much more than that.
Okay.
Yeah.
Well, that's very good to know. Doesn't the landlord's coverage cover something though for people?
They don't want to cover it if it's your negligence.
Oh, okay.
Yeah, and that's how come many, and I'm seeing more and more of it in Lubbock, especially the nicer apartments, that you can't rent from them unless you have
Okay.
100,000 or whatever. And the difference between having 100,000 and 500,000 in liability is maybe $15 a year. So you want to go with the most that you can
Renter's
get.
insurance is not that expensive.
No, renter's insurance is not. Probably the average for somebody who has 15,000 of personal property and then has $500,000 in liability, they may average paying maybe $200 a year
Okay.
for it.
So it might even be one of the cheaper insurances that
Yeah.
we can even purchase.
Yes, it
'Cause I know
is.
that's way lower than my homeowners.
A whole lot, yes. But it's not covering as much,
Right.
you know. If it hails on their apartment roof, that's a landlord got that one. Yeah.
All right. So renter's insurance is definitely something that students should purchase. And at some point, they'll hopefully graduate and move out on their own and eventually buy their own home. What are the different types of home policies that are out there, and what should students look for?
You want something, when you own your home, you want replacement cost. You
Okay.
do not want actual cash value. And that's the same way on your renter's policy. If you've got that old futon and stuff and you think if it's gone, it's gone. But if you've got things that you know, your MacBook and your you know,
Right.
all this electrical stuff that really cost, and you have to replace that because you
Yeah.
need that. If you have an actual cash value, then it's whatever the market value is the moment before it was stolen or burned in the fire or whatever. That's what they will pay you, the actual cash value. And you own 10 pair of blue jeans that you pay $70 a piece for. If you have actual cash value, what is the resale on a pair of blue jeans? You know,
Yeah.
$3, $5.
Right.
And so that's how much you would get for those blue jeans that weren't there anymore. But if you have a replacement cost, then they're going to give you whatever it takes to put that 10 pair of blue jeans back. And so that's true on your renter's policy, and then that's true
Okay.
on you want replacement cost if it's something that is important to you. And on a homeowner's, you want everything to be replacement cost. The only thing that may be actual cash value is your fence, your wooden fence that's
Okay.
in the backyard
Right.
at actual cash value, because it has a natural decaying.
Right.
No matter what you do to it, you can stain it once a year, but it's going to decay because it's in the weather. But you want your roof,
Yeah.
which is a big deal here.
I can testify to that one. I had a roof that we had a windstorm, and half the roof, the shingles literally blew off because
Yes.
there was 75-mile-per-hour winds.
Yes.
And I didn't know it at the time, but I had actual cash value, and I only got a check for $3,000.
But it costs $10,000 to put it back.
Exactly. So I got to pay the rest of it to put the roof on, and
Yes.
that was not fun. So
Yes.
I made sure the next time
You want to ask those questions.
you know, I called my agent and was like, hey, I want this to be replaced. And so,
Oh, wow.
wow. That was
Yeah.
not, that was not fun. And it
It was a
really
learning
wasn't
experience.
that big of a difference cost-wise for me. It was probably $200 or $300 more a year to
Oh,
buy
yes.
a replacement cost
Yeah,
policy. And that's what I have now. So,
yeah. But you want to ask those questions.
right.
And you want to, and nobody expects you to, when you get that packet in the mail, once you have a policy and it's like this thick and it
Exactly.
comes in that envelope, nobody expects you to read all that. And I don't know how many times I've looked at it, but man, I wouldn't read it. You know, so you've got to trust who you're doing, and just like what you're teaching here, you're teaching people to know the right questions to ask. You ended up with an actual cash value policy, obviously, because you didn't know to ask for a replacement cost or what
Exactly.
it did.
Exactly.
And so education is very valuable in this when it comes time to turn in a
Sure.
claim. But replacement costs, especially with a house, and houses keep their value pretty good, but a roof, the average here in Lubbock is once every 7 years to
Sure.
replace a roof. And it may say 30 years on the shingle package, but no, none of them last that long. So if
Right.
you have a 10-year-old roof, that's considered a pretty old roof here.
Sure.
And so if you have that actual cash value and it's going to cost $10,000 to put that back, then if you have actual cash value and it's 10 years old, then they're going to depreciate it down at least half. And so now it's down to $5,000, and then your deductible's $1,000. So they write you that check for $4,000, say put your roof back on,
Right.
but it's going to cost $10,000. But if you have a replacement cost, you're still going to get that check for $4,000 because you're going to pay your $1,000,
Right.
and then $4,000. You put that roof back on, you hand your agent or your adjuster the receipt, they get it back, and then they write you a check for the residual amount. They found in Texas, because we have so many hailstorms, that they were, when I first started doing this, they would write a check for the whole thing, the $10,000 minus your deductible, and they would hand you that check and say, you know, get a good roofer, you know, and all this. But people weren't, you know, something happened, their car, you know,
Right.
and they were going to put that roof on, but they never got around to putting that roof on.
Right.
And so then they start getting leaks inside and that kind of thing. That's not covered because we paid to put a new roof on.
Right.
And so you didn't do it. And so now you're out. So the Texas Department of Insurance, now we pay the actual cash value minus your deductible, you put it on, and the roofers know that this is the way it
Sure.
works. And so they know that in a couple of days you're getting the rest of that money, and then they'll...
And a lot of times they'll work with you.
They will.
Replace the roof. They'll wait to
Yes,
collect the rest.
they know.
Yeah.
They know that that's the way it works, and so they will. Lots of, if you get a good roofer, and that's something else. You want to make sure you get a good roofer. You don't want somebody
Sure.
that's just has a sticker on the side of their car now because it hailed in Lubbock, but they don't even know where your address is,
Right.
kind of thing.
I always try to look for roofers that have been in business and that they're actually local people, because there are companies out there that basically storm chase.
Yes, they do.
And they
And you can't find them later.
yeah, and so their warranty is only as good as
That's right.
you know who they are. And
Yes, and you don't want anybody cutting corners.
right.
And when you have a deductible on your house, that's your contract with the insurance company that you've chosen. Same way with your car, you know, that I chose a 200 or I chose 1,000. I'm willing to take that risk. And so if you chose to have 1% of a $200,000 house, then you're responsible for the first 2,000, and we've got the rest for
Okay.
you. And you'll have roofers that, and it's not legal, but you'll have roofers say, well, for that $2,000, if you'll let me put the roof on, I'll put my sign in the yard and pay you $2,000 for putting my sign in the yard. You have a contract that you're willing to take that much of the risk. And so that's really not the way to do it. You pay your $2,000 to the roofer, and you're getting a good roofer if he's going to stand by that,
Right.
and make you do that. You've got somebody that's going to really do a good job, hand nail, make sure valleys are good, and
Sure.
would be there after the fact. Yeah.
Exactly.
Yeah.
And the warranty is actually valuable.
Yeah, that's a big thing at our office. Yeah.
Definitely. Oh, what are some things that influences the rates that somebody would pay on their homeowners coverage?
Every company is going to have different discounts. How they've set up their policy with the Texas Department of Insurance. So it like our company, one of our biggest discounts is how new your roof is in West Texas,
Okay.
in this part of the state, because a newer roof, the same hailstorm, you have a brand new roof, and your next door neighbor has a 10-year-old roof. The same hail falls on it.
Right.
They're going to have to be replaced. Yours is resilient, and those marble size, golf ball size are going to bounce off because it's new. It hasn't set through the suns and the wind.
Right.
And so we charge on risk rate. So you're much less of a risk because you got that brand new roof.
Okay.
And that'll diminish each year because
Right.
now it's set through 2 summers, 3 summers, 4 summers. And so that will get less each time. The newer the house, the better the rate because it's going to have less problems.
Sure.
The newer the roof. Credit, again, is a biggie. The fire resistance of it. So if you have a wood house or a brick house, if you have that hardy plank that's made out of cement, that's fire resistant.
Right.
That makes a difference. If you live out in the country and you have a volunteer fire department and it's going to take them 20 minutes to get there, you're going to pay more in
Okay.
rate than somebody that in Lubbock, there at least every 1,000 feet there's a fire hydrant.
Okay.
You're no more than 2 miles from any fire department if you're in the city. And so we're a fire code rating of 2. 1 being the best and 10 being the worst. I live in Ropesville in the country. The closest neighbor is a half a mile, and I am a 10.
Oh, wow.
So
Okay.
I pay a lot more rate
Right.
because if my house catches on fire, it's just gone.
Yeah,
it's
total.
yeah, it's gone. Yeah, and so that makes a difference. But so the type of material, the age of the roof, bundling makes a big difference too.
Okay.
So whoever you are with, you want to make all your policies there, your life policy and your auto and your home and your umbrella policy. You want those all to be together because they give discounts and they kind of stack on each other. And that way you can get the best buy.
Okay.
That way. I meet a lot of people that one is here and one's there and one's there. So they're not getting any of the benefit of putting those together.
Right.
And plus they don't even know where they're at, or in your agent, because they only have that one piece of your policy, then you don't talk to them very often and you don't get to know them and have a relationship with them.
Sure.
But when you have somebody that has everything, the chances of you talking to them, several times in the year and getting to know them are greater. And so when you do call, they'll know, oh, that's the people that live around the corner, and that has the 3 kids and
Right,
little
right.
girls in ballet, that kind of thing. And so it's very important to them to make sure that you're taken care of. So that's a good way to help to do that.
Is there anything that you think that homeowners or even renters overlook when they get a policy that's common? Or?
Just maybe even just asking about turning in claims.
Okay.
And it really, it hurts you on the auto side in the number of claims, but it can hurt you in more ways than one by turning in little petty, okay, you wake up and the hot water heater has, and the
Right.
carpet's wet, and so you call that 1-800 number, but you have a $2,000 deductible because you got a $200,000 house. And it's going to cost $500 to suck up the water from
Right.
the carpet tech or whatever. And so you called in that, and it's below your deductible.
And so it didn't even help you.
Right. And you've done that twice in the last 3 years.
Right.
You know, some little thing. Or it held, and you just want somebody to come look at the roof. So you just turn in a claim. You know, and well, the chances here, you've done that 3 times this year. You know,
Right.
I couldn't write a house the other day because they had done that.
Oh, wow.
And I couldn't even write it. It's not, and if they went to sell their house, the other person couldn't insure it
Wow.
because you've called in all these little claims. So that house has all this history.
Wow.
And the underwriters are not looking that it's all zero payout. They're
Right.
just seeing it has this many claims. Like, red flag, you know, I don't want to insure that house. That house is, you know,
So people definitely have to look for that.
yes. Or turning in because somebody broke into their car and stole, you know, their Yeti cup or whatever, you know, and so they call and turn in a claim because your homeowner's insurance or your renter's insurance pays for lost thefts out of your car. That's the insurance that pays for it.
Oh, okay.
But you want to make sure that you're thinking ahead.
Right.
So again, call your agent. See, would you turn this in? You know,
Right.
so that because you don't know those things that are going to follow you for a while. And if you're thinking about, I had somebody yesterday that somebody stole his lawn equipment out of his open garage, and he said it's probably $1,200 worth of stuff, and he has another, but he wants to come over to us, and he said, I'm thinking about turning this in, and I told him I can't write you if you do because it's a theft. And a theft, the statistics show that if somebody is stolen from a particular house, then they are more than double in the next 3 years to have another theft.
Wow.
And so an underwriter won't take it.
Okay. So make sure to keep your garage shut and
Yeah,
locked.
and that's a big deal around here. Yeah, so, yeah. They was in the backyard. They had just been mowing.
Oh, wow.
They had just been mowing and so had it up. It's sad, but that's the way it is.
Garage.
That's the way it is.
I guess it's the taking advantage of the opportunity.
I guess
Somebody
so.
driving by
Yeah.
or a neighbor.
Yeah. If you see them out mowing.
So one of the things we've really talked about in both the auto and the home and the renters is that liability piece.
Mm-hmm.
At some point, it's probably going to be beneficial for people to look at umbrella coverage.
Yes.
So I guess kind of talk about what umbrella coverage does and how it's helpful for people.
Umbrella coverage is, so if you have $1 million of liability just on your regular house policy,
Sure.
and you have $500,000 on your cars, and you're like the young lady that hit that person and killed them,
Right.
then that umbrella policy would go over the top because what is somebody's life worth? What's the judge going to say somebody's life
Sure.
is worth? Is $500,000 going to cover it? I don't know. And so this umbrella covers over the top of that. Your primary liability off of your auto and your home are first line. But once it reaches the top of that and we're still have some responsibility for this, whatever's happened, then this umbrella will kick in.
Okay.
And you can buy $1 million increments. And when I first started doing this, I thought of rich people having umbrellas.
Sure.
Now that I've been doing this for 13 years, people that are out doing real life and need an umbrella.
Sure.
Because, like this 19-year-old girl that hit the 62-year-old man, you know, this could affect her for a long, long time. If he says you owe $2 million for the life of this man that you hit, well, it's not going away just because they're not going to accept a $500,000 of what her auto limits are,
Right.
then, you'd want the rest of this, or then comes in the fact of a 30-year wages or future inheritance or
Right.
that kind of thing. And so it's not just rich people that have money and you don't want them to take that, even though that does play a big part in it. I've had I had an instance of a 16-year-old downtown here, and he sideswiped an old pickup, just wanted to drive, and he sideswiped it, and the gentleman was really nice and didn't want the kid to get in trouble, called me and said, I just want to verify that this kid's insurance is good. I assured him that it was, and we'd take care of his pickup, ask him if anybody was hurt. No, nobody's hurt. I just don't want him, I know what it would do if he gets a ticket and that kind of thing. And so I just want to make sure it's good. Well, the next day I get a call from a lawyer. This gentleman's hurt. And he wasn't hurt the day before when I asked him, and there was a little thing. I don't know if he Googled this name. These people have a very prominent business in
Okay.
Lubbock. And suddenly he's hurt the next day. And we see this over and over again. So you don't know, and it doesn't have to be anything big.
Right.
If you get an aggressive lawyer and just the right circumstances, it could be the difference between getting to live the life that you're dreaming of, or paying for a long time. The original owner of our agency back in 1991 had an accident, and he had an umbrella with uninsured motorists, and there's only about 5 companies left in the United States that will offer that on their umbrellas, because it's a #1 payout. But he was in a bad accident where a semi-truck pulled out in front of their motor home. They were pulling horses down around Abilene, and they crushed into the semi-truck, and it was his fault. And the guy had the 100-300 limits at the time, and back in 1991, that was pretty big limits. But they used that in the first weekend. In the hospital, it crushed my boss's pelvis, just turned it into powder, pushed his femur up through his body. His wife's legs were between 45 and 55 places broken. His son's neck was broken. It took 4.5 hours for the Jaws of Life to get them out of their motorhome. They had to bring blood to the motorhome because they were dying, and transfer blood. And so just a split second, things could change. And he had an uninsured motorist, and he said he was still struggling, making ends meet, because he was still young in the business and all that. And every year when he would go to write the check for the umbrella, he'd think, oh, I could really use that like on payroll or whatever. But he'd always write, because he knew it was the right thing to do. He would go ahead and write the check and pay for that. If he hadn't had that, he's now semi-retired, do whatever he wants, because he invests his money, that it ended up costing $1.5 million back in 1991. So equivalent of that probably in medical cost is $10 million now.
Exactly.
And if he hadn't had that coverage, he would have had to have paid those medical bills, because the guy they used all his limits, and then he used his uninsured motorist, and then his umbrella uninsured motorist picked up. He could have sued the gentleman, but he had nothing. They did some research. They could have sued him, but there was just nothing there, and they were so hurt they didn't really want to pursue all that. But his uninsured motorist, his umbrella, saved him, and it made him where he was today, that he could work 2 days a week and fly his plane, and
Wow. Okay.
But if he would have had to pay that $1 million to the hospital, that money wouldn't have gone into investments. His life would have changed.
Yeah, definitely.
And umbrellas are really inexpensive. The uninsured motorist part is the most expensive part of it.
Oh yeah.
And that's the reason that there's only a few left, because it is the #1 reason for having umbrellas.
Okay.
But there's many gaps too that are in policies in your homeowners or your auto, and there's very few gaps in an umbrella.
Okay.
So even if your auto wasn't going to pay for something, because of that way it's written, or your home because of the way it's written, your umbrella would pay for it.
Okay.
Yeah.
So basically that umbrella is there to pick up the slack from
Yes. Or that
the
excess.
excess. Right.
Yeah. And with the lawsuits that we're seeing, that excess is not unusual.
Yeah. When we, again, I don't think we can emphasize enough, legal and medical costs are probably the two
Yes.
biggest things that we have to deal with and we have to insure ourselves against. And so whether it's auto, home, renter's insurance, making sure we have that liability coverage in place, and then looking at umbrella policies to go beyond that to cover us and in case something else happens, or the limits that we have on our other policies are not enough. So it's definitely a good thing that we're talking about that today. I think students can benefit from that.
I agree.
Well, was there anything else you wanted to add before we wrap up here?
No, I appreciate you asking me to come and share.
Well, we're glad to have you, and thank you for coming and sharing your expertise and your opinions on things. And y'all, if you have any questions about anything, you can always ask me, or you can call Debbie, and she's glad to help you out in any way we can.
Anytime.
All right, thanks for watching.